Okay, we are live. Okay, good afternoon, man. Thanks for joining us at lunchtime. So, what are you having for lunch, Kun Hong?
Actually, just had my lunch just now because of this.
So, what are the options for your lunch?
Porridge and tiramisu for dessert.
Cool. Sorry, porridge and tiramisu.
Yeah.
Oh, that's a weird combi. Okay, good afternoon, everyone. Stand by for some serious questions. Oh, yeah, please go ahead. Come and flood us with questions. Join us for lunch. Thank you very much for joining us. So we have Kun Hong with us. He's the BiOption scientist. As you can see, he is a scientist. Oh, okay. Some of them having kopi for lunch. Good afternoon, Raymond. Good afternoon, person who drink kopi. I cannot see your name because you must click StreamYard. And there are friends from Facebook as well and YouTube. Correct. Okay, great. Now, today we're going to talk about very interesting option techniques. And by the way, for those who have been joining us, this is a series called Options 101, and we'll be talking through different ways of actually using options, the 4 key basic ways, especially. Okay, hi Jinky, Jaykin. Okay, hi Jennifer. Okay, great. Good afternoon to everyone. Okay, great. So let's talk about the option strategy we're going to learn today. I am super excited. I think you've seen the title, guys. You know that this strategy is actually my first option strategy ever, because I did read in a book, Multiple Streams of Income, quite a number of books. They do call this covered call. So let's dive right into it. Okay?
Yeah.
Cool.
So this is actually linked to the first episode. So you can go back to watch if later on if you want to use this strategy.
Oh, yes. Correct. I mean, this is linked to the first episode, right? So let's go through this and then we can share what we want to do. Yep. So why should we use this strategy? Hey, why you like to put these pictures here? Doesn't matter. Okay, let's go to the key things. Reasons.
Yeah. So the reason to get this is similar to last week. You get money immediately. So it's another type of passive income. Yeah.
If you love passive income, please give a thumbs up or a heart shape. Hey, by the way, if you feel that you think that investing is important, how many of you think that it's important? If you think that it's important, please type I. I means important and it's for you as well. If you don't take control of your own money, it's very difficult to really rely on other people to take control. So even if you want to find a good fund manager or you want to find someone who is good at managing your money, you need to understand it so that you can ask the correct questions, okay? So if you think that's important, do you type I, guys? Okay, important, correct. Now do us a favor, click the share button so that more people can learn also. We're going to teach some very foundational and basic stuff, but very powerful. A lot of people, they don't want to go through the basics. They want, the quick and easy way. The basics is the way to go, okay? Passive income is, in fact, I first started using this strategy called sell call or covered call because it gave me some income. I love it. Next one, easy to execute. Is that so?
Okay lah. Sometimes if you got the stock itself, it's easier to execute. But if you have the buy call first, then it's more complex if you combine both. But it's easier lah because the
others, one leg, right? One leg.
Yeah,
single leg, so a bit easier. Yes.
And the easier part is because the previous one, like must see the open interest, must see delta, must see extrinsic, a lot of complicated stuff. This one is a bit easier, I think, because the criteria is a bit different. To me,
cool. Hey, got one question come in now. So let's answer this question. Is it possible to use 1K to create a weekly income or money income of 500 per week or 1K per month? So using 1K create 500 per week or 1K per month. What do you think?
I don't think it's possible with this strategy because if you want to do that, right, it must be doing some damn risky stuff, which I don't really recommend. So
you must take that 1K, go and rent a taxi, and then go and drive around and then do Grab. Hey, seriously, sorry, I didn't know the name, but we also want to teach something very realistic. It is very beautiful to think that it's possible to make 100% because 1K to make 1K per month is 100%. I mean, so far based on my records, if I can make about 10% per month using strategy X plus diagonal call, that one is considered quite good already. But you do need to monitor, and it's not like say super consistent every month. Maybe you can make it one time, but the key thing is consistency. Do you all agree that consistency is important? If yes, please type C for consistency. Okay. So, but it is possible to make a couple of percent every single month. So your capital got to be a little bit bigger, lah. Okay. Go ahead and work a bit harder. Okay.
Yeah. And lastly,
not what's the appropriate amount. Later we can take a look. But market conditions does affect the percentage. When you are inside investing, right, there will be fluctuation. There will be fluctuation, guys. Now, even nowadays, even if you go and do a work when you get salary, there's also fluctuation now. You realize that the economy is so uncertain. You have to be comfortable being a little bit uncomfortable. You have to do that even in your work, even in your investing. I do that. You guys are actually getting used to this. But once you pass the uncomfortable stage, right, a lot of things I would say diversify, get multiple streams of income. You don't depend on one source of income. I think that's very important. And of course, do something that you like. Yep, let's go for it. You can earn money in most directions.
Yes.
Tell us a bit more about this.
So similar to last week's one, you earn money in most directions unless the price drop a lot. But this time it's opposite. You only lose money if the price suddenly increase a lot.
Oh, okay. Increase a lot, you lose money. You lose opportunity actually, correct?
Yeah, actually it's lose money depending on your position lah. Because if
okay,
you have the buy call, they must
okay, what you're saying. No, if it drops a lot. Okay, you're talking about sell call without cover. Oh, okay. Well. Let's take a look at this.
I will tell them to cover it. I won't do the naked one, but must example of the naked one.
You can be naked on Facebook Live, cannot naked. Okay, Ken.
Okay.
2K for 200 weekly income. Okay. Maybe I just share this point because I think there's this particular audience. By the way, I really appreciate the question. Really, and we really want to share sincerely what is possible and also what is realistic. Now, that being said, right, Kun Hong, please correct me. That being said, this is only based on our experience. So maybe somewhere else they can really give you a very high returns with very little risk. Go ahead and continue to explore. I'm not saying that we know everything. I do not know everything. Okay. So Kun Hong, do you think it's possible you use 2,000 for a $200 weekly income using this method?
What is for stocks and options, the things that I'm teaching, no, it's not possible. It's quite unrealistic. It's like 10% every week, which is very, very high.
Correct. It is. I mean, it's not impossible. You can use spreads, you can do a lot of things, but it is whether you can be consistent. That's the key thing. So far, we cannot consistently guess the market, so it is not very highly possible. But if you do diversify and then really spread it out, they will reach a certain point in time. Okay, anyway, investing is not a get rich quick thing. It is not. By something very powerful, it can make you rich. It can make you rich in a passive way, automated way. So guys, I really hope that I don't want to be a spoiler, I don't want to disappoint you guys, but I also want you to actually have a fluffy hope and say, wow, every time should make money. It's not the case. You can do it consistently. Okay, cool. Okay, come, let's go for it. What is the call? Okay, which is here, correct?
Yeah, so call is the right to buy. That means when you're selling call, you don't have the rights anymore. You are obligated to sell at a certain price.
Yes. Now we are talking about selling. Selling call. So for those who missed the previous two episodes, right? You can go back and take a look. Kun Hong actually talk about, what did we talk about? Buy call. We talk about sell put. Now we're talking about sell call. Make a guess. Next week, what we're going to talk about. If you can guess correctly, you're very smart. If you cannot guess correctly, actually, I also don't know. Okay, so come on.
Okay.
Yes, the obligation to sell.
So in this case, similar to previous week, we are obligated to do something. That means we are not in control. That's why this is dangerous if you do it naked, which I'll explain later. So this is similar to last week. You get money from someone first, then you promise them to sell them at this fixed price.
Sell put. Yeah, we talk about sell put also. We already spoken about that. So okay, by the way, I think Ding Kiet Po said something very wise. We should learn and not keep asking about expected returns. Well, I want to say that again, I'm not saying that we should not aim for returns. Ultimately, as investors, we need to know where's the best place to put our money. That's totally correct, So after we actually learn expected returns, what is the potential? I want to say that making 100% per month, it is not something that we have seen consistently before. Once in a while, definitely. Okay. Now, so expected returns. If we take Warren Buffett as the benchmark, right? Hey, by the way, you guys guess, Warren Buffett, what is his yearly returns? Let's talk about yearly returns. Anyone knows? Please type what is Warren Buffett's yearly returns. And again, you must know Warren Buffett. He's in a different condition, meaning to say he has a lot more money. He has also a lot more experience. So both right. Actually, a lot more experience and knowledge is an advantage, but lots more money is not an advantage in terms of percentage returns. but his smaller percent give us, we also make a few billion also. Okay, so I want to, about 25%, about 20%, correct? This is a possibly reasonable amount, but let me share with you something now. Actually, there was one point in time, right? I invited Warren Buffett makes more than about 20% per year, depending on when you measure. But let me share with you something. Warren Buffett in his earlier days, right, the first 10 years of his life, right? I mean, not 10 years of his life. The first 10 years of his investing life, make a guess. Do you all know how much he makes? Do you know, Kun Hong? I was reading it.
Actually, not really.
What do you guess? It's okay, we don't know everything correct, but what do you think he's making?
Higher than 20 plus.
Huh?
Should be higher than 20 plus. Because
should be higher. He was making about 50% per year. So he was making 50% per year. Do you think that's good, guys? If you think it's good, type 50%. Okay. Now, anyway, I'm not saying that we should aim. Okay, we know that the potential is there. It's just that I realized there was a point in time, there was this particular student that I was teaching. His name is called Sunny. I respect him so much, because he was making quite consistent every month. So he make about like 1,000, 2,000 per month. And I think, I can't remember his capital, but probably he's making about 3, 4, 5% per month. Then one of the person asked him, because he was during a live event, one person asked him, he said, Sunny, how much do you aim per month? Then he said this very wise word. I want to really credit him for saying that. It did not come from me, it came from him. So Sunny said, right, he said this, he said that, I do not aim for any percentage per month. I aim to do correct investments every month. Well, I thought it was very wise. I thought it's very wise. If you guys think that's very wise, please type that. Correct investments. Not how much returns. I think that's very important. Okay, Ken? So come, let's go back to it and say, how can we correctly use a sell call? In what kind of situation? I think there were some questions asking that. So when do you use that? And please explain a bit more.
So,
example. I love it. Yeah.
Okay. So before you go to salary, there's at least 2 different type of criteria you need to hit before you can even use that.
2 criteria.
First criteria is you must have at least 100 of that stock.
You must have 100 stocks. Must have, guys. Don't have, I tell you.
Because one option you promise to sell for 100. So if you don't have that 100, right? If suddenly the stock price increased by $1,000, then you go bankrupt or beyond. So you must at least have 100 of the stock. Or correct. If you don't have that 100 stock, you must at least have a buy call. Because
yes, that one is slightly a little bit more advanced, but that works as well. That works as well. In fact, this is one particular strategy that I personally use quite a bit. Buy call, then sell call for monthly income. And again, emphasize, the reason why you need 100 stocks is because when you sell a call, here guys, when you sell a call, you have an obligation to fulfill. What are you supposed to fulfill? You are supposed to have, you're supposed to have 100 stocks every contract. You're supposed to have 100 stocks to sell to, who is this guy?
Now it's
no. Okay, so sorry. So you are this guy, is it? You are the seller of the call.
Yeah, we're the seller now, the opposite side.
You are the seller of the call, and this guy is the buyer of the call. So you sell something to him, guys. You sell something to him, and you sell a call. Okay? And in return, he pay you income. That's why we get immediate income, correct? So it was one of my favorite strategy. It was my only strategy in options when I first get started because I didn't know a lot about options, but this strategy actually made me quite good income. So so when you collect the money, guys, you sell the call, correct? This call, right, basically is allowing him to you promise him, you have an obligation to sell your stocks at a certain agreed price until a certain date. Okay, so there are a few key things. Later we're going to some more in-depth examples, then it'll be easier.
Yeah.
Okay,
so next slide. So I'm using that story to okay, so previously we are the buyer who want to buy this house because we think that like MRT will be built nearby, then the price of the house will rise a lot.
Already, so which house is that? Oh no, not a real house. Oh, you're just using example. Sorry, I thought it got a real house. I quite excited also. Okay, then.
So last time, someone else already sell us the call. So now imagine we are the seller, but we already have a buy call. So after we buy call already, now we think that maybe we are a property agent, so we know some more inside information, and we think that the price will not increase that much because of your inside info. So in the stock market, you may not have inside info, but you can estimate sometimes. So if you think the stock or the house will not go up so much,
So this is a scenario where number one, you think that the price will not spike up, maybe go sideways, is it?
Yes. Sideways, or down is okay.
Okay, it will not like have a huge chance of like jumping out suddenly. Okay.
Yeah. And this is under condition that you already have the house or you have the deposit. That means you have the right to own the house.
Either you have 100 stocks, which is a simpler way, or the more basic way. Otherwise, you need to have core. You need to have a core of their house already. So this one is a bit complicated. You need to calculate a bit more, but understand the principles first. You must have the rights to the house first. You must have the rights to the house. If you either have the house or the rights, correct?
Yeah, the OTP or the key, one of them.
You must have the key. Okay, I don't know whether key. Okay now. Okay, go and take my house, go and duplicate the key. Then but basically the house must so-called belong to you in some way, okay? Yes. Either through a contract or through actual ownership. Then that's where you can sell a core to someone else, which is Tony Stark. Why can't I be Tony Stark? I want to be the more handsome one, but doesn't matter. Okay, now then.
Okay, so in this case, since you already own the house, and let's say you are living in the house so you are living in the house, but you still want rental income.
I still want rental income.
So you want to use the house, but you still want rental income on top of that. So in that case, you can sell core. So in this case, it's like you promise someone else, okay, I was promised to sell you this house at, maybe you bought for 10 million. You say, I promise to sell you at 20 million within 2 years. Mm-hmm. So someone out there, he may think that, maybe the price will go beyond 20 million. So he said, okay, then he pay you the money. But you know that this house won't go above 20 million. So you just take this money, and 2 years later, he do nothing with the money that he give, because the price is still below 20 million. Then you can keep repeating this thing.
That's right. Actually, by the way, real case study. So one of my relatives, right, recently they wanted to buy a house. Okay, just done real case study. But anyway, it is relatable to the stock. Some of you say, need money. Hey, definitely need money lah. Investing needs money one. So some good stocks are not cheap to keep. No, definitely correct. Just like good property near MRT, also not good. But what's your other alternative? Buy lousy stock, man. Also cannot be, correct? So it's true. There are certain constraints. There are certain things that is, again, what we are teaching is very realistic. It's not something that we're going to teach you fluff and then tell you already also cannot do, right? So right now, so basically one of my relatives, right, went to actually look at the house. No, serious one. So this one is a real case studies. So my relative want to buy the house Then when you buy the house, right, you need to buy this thing called option to purchase. By the way, do you guys know this? In Singapore, I think most places, you need to actually buy, meaning you say you put a deposit, okay, option to purchase. And they have the option to purchase, I think, for 14 days. Then after that, right, when they go and inspect the house, and then they do more studies, and then they can decide whether they really want to purchase the house. When we talk about option to purchase, they already lock in a certain price. So for example, this house is 1 million, they lock in 1 million, okay? Now, then after that, right, very interesting case, guys. This is really right now in Singapore. Right now in Singapore, especially for public housing, HDB, right? Hey, Kun Hong, do you have HDB?
Staying in HDB.
Right. You're still young, right?
Too young.
Yeah, maybe a few months later, because of so many fans, you get married soon, right? You can actually go and buy a resale HDB. Real case study, So this may help you understand a bit better. So my relative want to buy a property HDB, then they negotiate with the seller. Negotiate already, they come up with a price. Say, okay, Pam, example 1 million. Of course, not 1 million HDB. Now the thing is this, after they actually pay a deposit, okay, $1,000 deposit. This is called OTP. They pay 1,000 to buy an option to purchase the house. So they lock in the price. So what it means is they pay 1,000 to the owner of the house. This guy, he has the house, so he collect 1,000. Then they went to do a valuation. Very interesting. Now they say you must buy already. You must put an OTP. Then you can do a valuation. After that, right, the bank go and evaluate, and they say that no, the house is only worth 900,000. So of course you see, they pay $1,000 to lock in the price at 1 million. Then they realize, hey, the house is only worth 900,000. So obviously, they didn't buy the house, right? Because the bank valuation, and the bank don't lend them so much money because it's much lesser. So in the end, right, guess what happens to the 1,000? Can you all guess? What happened to their 1,000? Make a guess. Do they get back the 1,000? If you think they get back the 1,000, please type refund. If they don't get back the 1,000, please type passive income, because it is passive income. Okay, not passive lah, but it is income to this guy. Right? Now, in this case, right, we are setting the call, right? We are this guy. Okay, we are this guy from Prop Next. Hey, you must censor the brand now. You cannot do brand endorsement one. Okay.
Oh, it's not endorsement. That's randomly fine.
Okay. Yep. $100 stocks already $100. Yeah. For options premium 5K. Wow, options premium 5K. No. You think about it. If you actually have $100,000, and you can make 5K every single month. I want to emphasize, it's not say always consistent. But can you tell me where else can you get 5K of passive income? 5K is like 5% that month. I mean, in current climate can now. I mean, I thought it's not bad, but remember, if you have 100K, I'll never throw into one stock. I'll throw into at least 10 different stocks. Okay, so very, very interesting. Yeah, no refund. So understand that this is a very interesting technique. It's called sell call. So again, we are this guy. We are not Tony Stark. Next time, put Tony Stark. Okay, both people are handsome looking. It's just that maybe more people want to be Tony Stark. Okay, great. So coming to back to your theory, or you have some specific examples, right?
Yeah. So next.
Okay.
Or like where you can use it. So during these cases, previously we say try to buy at the support. That means at the bottom. But now it's opposite. We want to sell at the resistance. That means the top. So I only draw the resistance top part. So
sell call. Sell call, correct. We sell here and collect money.
So the theoretical line, now we are above the line, which is good lah. Because the more higher, the better. Because it's more likely for the price to continue to drop down back to normal.
Oh yeah, $100 stock is only 10K per contract. Anyway, correct, right. Hey, by the way, why you choose a downtrend one? Okay, but anyway, it's talking about basically stocks that don't shoot up lah, right? Later I tell you one very painful story of mine. Really very painful lah. Later I show you guys this stock lah. Every time I look at this stock, my tears want to roll down because, but it's quite funny. But I use this strategy. I've been making good money, and then it flew up, then never come back. Okay, can y'all guess what stock is this? One of my favorite stocks in the past. Okay, so this is XRT. This is Think or Swim, correct? This is Kunal's account. Yeah, can you give us more details so that we can lock in? No, I'm just kidding. Okay, so
XRT is retail ETF. So I choose something that I don't expect to fly up because even if it's a downtrend, right? If you choose a very good company, right, there's a chance that it might shoot up. So that's what we don't want. So you must choose good company but not so good, or somewhat lousy company. But if lousy company, you won't even buy the stock in the first place. So.
Oh yeah, correct. Also, they're trying to guess the company that I buy. Oh no lah. The company I buy, FB. That time when I start investing, I think don't even have FB. But it's okay. So it was one of the first few stocks. Okay, so you can sell SRT. So we look at this. When you sell SRT, 50 call. There's quite a few things now. So maybe you can explain to us what does 50 means.
50 means you promise to sell at $50. Even though now it's
sell at $50. Now is
44.9.
Wow, this number not very good. 4499 CC. Okay, so 4499 is the stock price. So basically, right, imagine you have the stock right now. Remember, you are this guy who already have 100 stocks of XRT. So, okay, later you can see, basically after you buy the stock, you need to have at least 100 stocks. So you need 4,000. You need to actually pay 4499, 4,000. And maybe you already buy already. After you buy the stock, while you're waiting for it to go up, slowly wait for it to go up, you can sell. You can sell a 50 call. What it means is you let Tony Stark or another guy, you sell to him, so that you promise that you can buy my stocks. These my stocks you can buy at $50. Correct?
Yes.
Okay. Tell us more. How much do we get from this?
So from this, we can get $30.
$30. So we spend 4,000 plus, we get $30.
Yeah.
How much is that? Well, like a bit waste time. We want to make 1,000 topping on. You give us this kind of nonsense trade, $30 only.
Oh, because you must see the probability OTM. So as you can see, right, it's 87.76. That means the chance of you losing money is 10+%, like 12% only.
Okay, so again, this is a particular thing that Kun Hong does. This is quite interesting. Probability OTM, meaning to say how likely is this guy going to how likely is this guy going to not get your stocks, correct?
Yeah.
So the probability of you not having to sell your stocks, it is 87.76. Okay.
So if you got big money,
how to calculate the probability? Wow, that one you settle. That one you're the scientist.
oh, that one is just think or assume you can just customize like last time wrong, just type probability OTM, then just add.
Yeah. Why you cannot see other people's question here? What do you mean? Okay. If already got millions, most will go for bonds. Not really lah. Not really. Depends. Okay.
Depends.
Yeah. Depends on your own. But like Warren Buffett don't go a lot into bonds. His is billions, correct? Huh? Okay. How's let's say I told you people ask already. How's the probability calculated? Actually, it's based on I think if I'm not wrong, it's based on their fluctuation. So for the past, I think certain number of days, how much do they actually fluctuate and see whether they can fluctuate by that certain amount. They call it deviation, standard deviation. There's a certain calculation one. This one, go back and ask your math teacher. But the key thing is this: based on historical swing, the range that they swing, how much probability are they going to swing to that price, and then you have to give away your stocks. So this is the whole idea. Okay. So okay lah, actually not bad lah. $30 pocket money. I put $5,000 inside. Let's say my POSB. They also don't give me $30 every month huh? So which is quite okay. And this one is about 1 month, right? Or it's a 32 days trade.
Yeah.
Great. So, by the way, guys, this is a stock that you believe in, you like to hold, at the same time, extra income. How many of you love extra income? Type extra, okay, income. Cool. This one, more likely this one. Uptrend.
Okay, so next one is Facebook. So it's a good stock, and you can see the growth is quite stable if you follow the 2 lines. Okay, now it's not a good time to sell call yet. Must wait until it touch the black line or near the black line at the top. But not so bad.
Right. Still so sell call here lah, correct? Around here.
But sell above there.
Above, yeah.
Above the back line, so that you know it won't touch.
Oh, this one expensive lah. This one you need a lot more money because the stock price is 200 plus, so you need at least $20,000. Okay. Well, for some it's easy peasy. For it depends on your budget. So the good thing about investing is there's so many stocks. There's like 8,000 over stocks for you to choose. Okay, not all of them got options. Maybe about 3,000 got options. Go and choose for the right one. It's like fishing. Go and hunt for the one that suits your budget, is good company, and also a certain trend. Wow, I need to do a lot of work. Yes, correct. But the thing is, once you do a one-time work, this particular stock can last you for quite some time. Okay, so this is something that I really want to emphasize. Okay, it's not a Gary Strict thing, but it's something that can get you really rich. A lot of people, when they are willing to do the work, they really become rich. Okay, no joke. Okay, this up to you. Yep. Next slide, is it? This is Facebook. So you sell Facebook 270.
Yes, you promised to sell at 270, but now it's only.
Now it's how much? 245.
Now it's only 245 only.
Wow, this one you need. Well, this one you make $400. So for those who want to make $400, wow, what? But this one, how much you need? You need $27,000. You need $24,000. So this is you. You need to have at least 100 Facebook stocks. Obviously, there are ways to reduce your income, reduce your capital. But we are talking about the basic way one first. Okay, 24,005 lah. Okay, 24,005. You can make $400 every month in USD. Of course, this one also USD lah. Both side USD lah. So cannot be here Singapore dollars, then you get USD. It doesn't work this way lah. Okay, Ken? Good.
Okay. So the loss they say is infinite, but that's not true if you actually have the stock. They are assuming that you don't have the stock. So if you have the stocks, right, and they exercise, you're still technically earning money, but you potentially could have earned more money. So this is why you must have the stocks in the first place.
Yep. So this is Facebook. Okay. There are thousands of call options to choose from. How to choose?
Okay, so got 3 methods. The 3 points. One, I look at the date of expiry. Second one, also very important, open interest. And lastly is the probability OTM. So these are the 3 main criteria I see. Okay,
date of expiry. Okay, so we are coming to the question already. So yeah.
So next slide.
Is it next slide? Okay, date of expiry.
So there's a lot of choices. Got weeklies, got monthly, got year. So usually I choose month one because weekly the open interest usually not that good, and I don't like too short. I usually choose as close as 1 month as possible.
For me, usually I choose 1 month, but depends on the type of stocks. Now, if you choose weekly, typically if you just calculate pure ROI, it is higher. So it is like you sell 1 month, right? Instead of sell 4 times 1 week. When you sell 4 times 1 week, it is usually higher, but you must take into account commission, because You have to pay
Not
4
really
times
sure.
commission also. You must go and calculate and see whether it makes sense. In the end, unless it is a bigger capital where the commission is a smaller percentage, otherwise, right, typically it may not be worth it depending on your capital. Okay, so for me, I usually sell monthly because when I first started, there isn't weekly also. So I started options in 2005, 2006. I just keep doing this. I sold monthly. I think it was only in 2000. I think about 4-5 years back then. There's weekly. Can't quite remember already. Yeah. So
and importantly, you cannot sell yearly because in 1 year, right, it's too much time already, and stocks generally go uptrend. So you give too much time, you surely guarantee your loss. So
don't sell yearly. Sell monthly or sell weekly. Shorter term.
Yeah,
Okay,
short.
great.
Must be short. Second is open interest. So
which market do you want to be in? Actually, right now, COVID, I'd rather be here, but doesn't matter. We get the idea.
But in the stock market, you want to be on the left side.
Because if you are doing business, you want to be here, correct?
Yeah. Because if you want to sell the call, in case things go wrong and you still want to keep your stock, you want to close the call option, you need to buy back from someone. But if you're on the right hand side, no one on the street to buy from you. But on the left hand side, you just shout your offer, everybody say, oh, I want to buy. Then you can just close.
So the way that BiOptions scientist Kun Hong, he treats option investing like a business, which I myself do as well. So you have to think in terms of like a business strategy and things of like traffic and things like that. So open interest, later we go back to review the slide, which is here. Here. You can see for him, when he choose Facebook, right? This is the correct slide, right?
Yes.
He chose one with huge open interest. Can you see that? This is open interest. You can customize it in your brokerage if you are using TD Ameritrade. This is TD Ameritrade. If you haven't opened one, please open one. I don't have an affiliate link, so you just tell them that pass me any referral fee you have to Sean. Okay, no, I'm just kidding. So go and open TD Ameritrade or Think or Swim TD Ameritrade and Ameritrade TD. Okay, America, like America trade Ameritrade. Okay, so he does the setting in open interest and also time. Oops, a bit covered already. 32 days, so less than 1 month, roughly around there. And finally, one last criteria. I think it's very useful. Do you guys find it useful so far? Okay, if you find useful, please give a thumbs up. Please also follow Kun Hong at his page. Okay, now the last one, probability OTM.
So this is the probability that you get to keep your stock. That means you don't lose money.
That's right.
So if you want to earn a lot of money in short time, like the previous Facebook users say, right, you go nearer to the number 1 because you go to the number 0 because you want to earn money. So higher risk, higher return.
Oh,
so
okay.
You have a high chance of losing money. Of course, you must take more money upfront from them. But we want to play safe, so we go nearer to the number 1.
What do you think? Do you want to actually have a high chance of making money, more consistent, or you want to actually take risk? If you love high risk type 0, if you love lesser risk and consistent type 1. Now, how to actually ensure that it is nearer to 1? It is this thing called probability OTM. And what is the probability that you usually choose? At least how much?
I choose usually around 80%. That's something I like. At least 1 in 5 times.
Okay, so again, let me go back to the screen. You can see here, the one that he chose is 79. You break the rule, bro.
I said around, can be slightly lower, but even though it's slightly lower, right, the open interest is way higher. So I just choose that.
Got it. So it's a combination of open interest, and probability. So okay lah. You can your plus minus 1-2% is okay, is it?
Yeah, actually 3% is okay lah, but around there.
3%. Then you might put 77%. Easier for me to go and tell the audience, right? So okay, he choose 77% and above. Am I right to say that?
Yeah, and you can go to the previous example, the XRT one.
Okay, XRT I saw 80-something%. So XRT, you can see he chose the one with the high open interest. Here, open interest.
Yeah.
So three things. One is expiry, less than 1 month. Open interest, the highest, and then third one is probability. Must be at least 77%, correct?
Yeah. So usually, normally I will pick the 81%, but I look at open interest, so low. So I just choose the not so profitable instead. Because
this one also cannot, right? This one 1,000 and then probability 90%. Is it okay?
Wow, but you see the money you earn, it's like even less, way too little.
Depends on how much you bargain lah. Maybe you can still get $30. Maybe. Okay. So okay, but I do hope that this is useful so far. Have certain criteria to help you guys. Okay. Now I share with you my set story lah. This is my stock. Okay, I show you guys. Open interest, is there a minimum? Good question. Is there a minimum?
usually I aim at least more than 300 lah. If not, I
at least 300. At least 300. Probability out of the money plus probability in the money is equal to 100%. You add up together, it is 100%. Yes, correct. Okay. Yes, correct. So at least 100. Okay. Great. And okay, let me share with you my sad story, guys. This one I think is very cool. Can y'all see? Is it zooming? Okay, you see this stock very cute one. This stock, right? I bought it around here. Let's see. I bought it around here. $10. Can you see? $10. At that point in time, it was not $10. There was a stock split. Okay, $10, correct? Then after that, I actually sold call somewhere around here. I sold call and then I sell put. So call, sell put. I mean, for those who understand what's happening, is because what happened is initially I bought the stock. So I have I have a lot of these stocks. I really like this stock a lot. Anybody can guess what stock is this? Let's see whether anybody can guess correctly. So I bought already. I sold call, and then sometimes I got so-called what do you call that? A sign exercise. So what I do is I sell put, then I get a sign again. So I sell call a few times. Suddenly from $10 it spiked up to $13. So I said, okay, it's okay. I wait for it to come down. But let me show you what happened now. Okay, it came down one time, but I didn't enter here because why? This one is 2008, 2009. But you see, it was at $10, guys. $10. You all can see this stock never came back down. Now, right, this stock is at $96, $95. So I could have made 90% over. Is it 90%? 900%, sorry. 900% over. Ayo, you all know what stock is this? So I feel very hard pain, but I never entered this stock again already. But I should have entered here. Okay, but now I found their competitor and I buy the competitor stocks, which is cheaper and much smaller. Anybody guess correctly? Let me see. This one. Yes. Someone guessed correctly. Ding. Okay. Yeah. Hey, is it you also kena or not? Okay, how come you know? It is actually this stock called Nike. Hey, real story. Very sad. I feel so sad. 900%. Who don't mind 900% over? Actually, 10 over years lah. But okay lah. But it's okay. I guess it's a lesson to be learned. So nowadays I really like. Yeah. Now I actually buy SKX though. Okay, SKX. I don't really monitor my Facebook Messenger. So ask me questions here. Okay, my Facebook Messenger too many messages already. I'm so sorry about that. I got like 1,000 over messages that haven't replied. Every single day got 100 plus messages. So please pardon me. Please ask me questions here. Okay, yeah. SKX. Yeah. Oh, you attended OMI. That's why you know. Okay, cool. Okay, so come. Let's go back to your slides, Professor. Yes.
Yeah, this is not the slides. Yeah, self-facing.
Right. So okay. So disadvantages.
Okay, so after seeing the good stuff, must see the bad stuff. So disadvantage is limited gains.
Like my Nike like the Nike. Like if I hold maybe I make more money than every month collect a few $100. Right.
You shouldn't do it on super duper good companies because this is good for those like
that time it looks fat. That time you know sometimes it's on the high side that you realize wow I shouldn't have done that. You know you it's always on the high side that you know that you should have done that. Yes. So limited gains. Yeah, it actually limit your gains lah. So you put a cap to how much you can make. Okay, but it is okay if it's on good stocks. But you have a bit of regret lah. So how to overcome this? Now I don't do so much of this on my stocks that I like a lot. If I want to do, I do on a few contracts, but I make sure the rest of them have unlimited gains. Yep. Yeah. Theoretically, unlimited loss. Oh, this one is if it's naked, right?
Yeah, it's naked. So if you don't know what you're doing and you don't follow the rule, you don't have 100 stock or you don't buy call, right? You just execute only. Wow, then you theoretically can lose unlimited amount.
Hey guys, don't trade naked. Meaning to say you must wear clothes, make sure it's all tight. The key thing is this: when we talk about naked, is you must have the 100 stocks. Must have. Yes. Otherwise, remember you're promising someone, hey, you can buy my stocks. You buy my stocks at this price, but you don't even have the stocks, right? Wow, I can tell you, if the price shoot up a lot, you have to fulfill the promise of selling them the stock. But where do you get the stock to sell them? You must buy at the market price, which may become very, very high. Correct. Okay, then the last one may not have stocks or options.
So because some companies you like, but it's too expensive, then you don't have money to buy it. So so you don't have the stocks. You don't have the capital to buy the stocks, or you don't have the buy call for that stock yet.
Yeah. Oh, I think there's one more thing that I want to mention. But this one we already mentioned it quite a number of times. So this particular sell call, the two key risks, assuming that you don't do cock stuff, assuming that you don't do naked, you do normal stuff, you do it correctly, right? The first risk is opportunity cost.
Yes.
Opportunity cost, okay? The second risk is definitely if you choose the wrong stock, the stock can also go down. Options cannot save your stock. You must understand this. So people ask me, what is the risk on options? Actually, the option doesn't have risk. The risk is always on the stock. So remember, options can never save your stock. It can help you reduce risk. It can help you increase income. It can help you actually increase your returns. But if you choose the wrong stock, that's it. Still GG, correct? So choose good stocks. Okay, cool. Hey, what's this?
Oh, so similar to the first time, option is just a tool. So it's like extra stuff to help you earn a bit more extra income. So if you use it wrongly, then you get injured by it. But if you use it correctly, it can help you. So normally, this one is why I teach this is because some people don't know how to invest. Then Warren Buffett also say, if you don't know what to do, just buy SPY. So instead of just buy SPY and hoarding, right? So after sometimes you can hoard until 100 SPY. But after that, you can start applying this strategy to earn a bit of extra. So instead of saying I track the market, you can say I beat the market by a little bit by using this.
That's true. Okay, so in terms of high volatility, upwards trending, is it good to deploy the strategy now? What do you think?
If you think it's upward trending, then don't do it. Only do it if you think it will go sideways or down a little bit.
That's right. Hey, but not all stocks are equal. When you talk about right now, the market is on upward trending, but every individual stock is slightly different. Example, if you're going to look at Microsoft, you're going to look at McDonald's, this kind of stocks are good stocks, but don't move on, give you dividends. So this one is perfect for dividend stocks, guys.
Yes.
If you look at dividends aristocrats, right, there's like 53 over stocks. For the past 25 years, they give dividends every single year and increasing. I don't know whether they can continue to give dividends right now, but when they give a lot of dividends, right, it is actually very flat, right? So when it's very flat, right, they give you but US dividends actually have to get taxed, okay? Yeah. So what happens is, because it's very flat, you just sell call, you get additional dividends. Granted, it may not be a lot, but okay lah. You collect dividends, you collect sideways. Cool. So this is the Coca-Cola also, I think, also quite flat one. Okay, they can't grow a lot more already. So myself just squeeze some options from them. I think there's a few good. How to close position? Repair, sell higher, put, sell higher. Call can be very subjective. Repair, OMG. Wait. Repair. I'm trying to understand the question.
So if they haven't exercised you yet, right, and you still want to keep the stock, you can just right-click close position. So
yeah. So different brokerage is a bit different, but you can just close the position. When you see the direction goes opposite where it's supposed to go. Well, you're all English, right? Short form until you just cannot understand. It's like it's okay. So you can do a right click. Let me see whether I have any positions. Okay, maybe I just do a quick demonstration. While you answer the rest of the questions, let me just log on to my thing or stream, see whether we can value add to everybody. Okay. If you all find this useful, how about just click share, and then more people can benefit, because I think the day and age, right, too much information. I mean, we are adding information, but we are trying to do our part to really give you guys like things that is realistic and really can make money on. Okay. So now what say you? Okay. So now in the event the stock goes against me, can I close? Yeah, correct. Yes, so it's talking about close. Yeah. Goes against you, meaning to say the stock price goes up.
Yeah, goes up too much.
Okay lah. A lot of times by then it's a bit too not worth to close already.
Yeah. Okay, so you lose money. But if you think you can continue to shoot up, then just close it off. Because by closing it, you can save the stock. Then you continue to shoot up, you earn more money. So cut losses, but it depends. If you believe that you will continue to shoot up, then you do it. If not, just do it.
You have any other brokerage you can teach them? Hey, okay, I teach you a trick, all right? Okay, I teach you guys a trick. So if you have problems using Think or Swim platform, well, you can open a demo account. Now, listen to this. You can open a demo account, because I know that not in every country you're allowed to use Think or Swim. But Think or Swim or TD Ameritrade, TOS, right? They have the best. They have the most function so far. They have the best and most function. Go and search Think or Swim demo account or paper money. Open up one. They can let you use for 60 days. 60 days later, so you can use the tools inside to analyze. After analyzing everything, you use your own brokerage to go and execute a trade. This is what I ask some of my students in Germany to do. They cannot open up a Think or Swim, but they can actually open up interactive brokers. They can open up Saxo Capital and many other brokerages. But Think or Swim is a platform, and they allow you to use for free. So what happens after 60 days? After 60 days, you just reopen again with another different email. Okay, maybe what I'm saying is not fair to think of swim, but hopefully one day when they are allowed to open in your country, that's where you are quite used to their brokerage and then you can use them. So please don't come and look for me think of swim. I'm trying to promote your platform. I don't get any comms from there anymore. Anyway, correct. So yes, what is the question that you want to ask? Do we need to see IV probability? IV probability?
IV.
You mean IV percentile?
I think they mean implied volatility or what. Not sure.
Oh wait, my thing of swim is not able to load. Okay, so consumer staple stock. Okay, great. So I got some. Oh yeah, okay, it's loaded already, guys. So let me just show you guys. So I think they were asking about what's the question? How to close is it? You can see Is it zoom in? Okay, so example. Let's see whether I have some of these. Okay, example. Let's say you buy a call, correct? You buy option or sell options, doesn't matter. You have an option position. Okay, how do you close it? Come to here. If it's a normal Windows, you right click. If it's a MacBook, you have to find the right click function. It can be double tap or things like that. But when you do a right click, see when I do a right click, they will allow me to create closing order. Can you see that? So what does it mean? It means that if I have the options, I bought the options, creating a right click closing orders allows me to sell. So closing means I no longer have any obligation if I have or don't have this option. Meaning to say I just close it. If I have, I sell. If I sell, I buy back. Okay, it is a closing one. So this is how we do it. Okay, Ken? I hope it helps. So this is a very useful, I would say, function to do all this. Okay, cool. Okay, let me see. Any other questions? Let me go back to your slides now. Okay, I think just to show this thing of swim. Again, we are sharing thing of swim not because we are shareholders. Are you shareholders?
No. It's just convenient. It's very good to use.
Use thing of swim paper money. Yay, make 6-digit profit already. Okay, I'm glad that you feel happy but it's really better, right? Okay, but good practice. Okay, thanks a lot for sharing, David. Okay, so now let me go back to the final part of slides. One thing I want to emphasize: options. The cool thing is it is not a double-edged sword. Double-edged means here also sharp one, means you can cut yourself. But the thing is, it's single-edged. Meaning to say, if you use it correctly, it helps you reduce risk. It doesn't actually have any key leverage. Okay, guys. Again, the emphasis of today is to short call. And again, the criteria is very important. Make sure you have the stocks. However, also understand that it is useful for stocks that are sideways. So you can go and some stocks you buy sideways already. Maybe you're working for a certain company then they give you stocks. Then never move on. Then you sell option But don't one day they got contract shoot up. Then you come and score us This one I don't know. Okay, your sell call being exercised. TOS shows -100. Do I have to close to buy call? Oh no, you double click. Fifi. You double click on the portion and then you click close. Same thing. If I hold on to my buy call as my stock is trending down, I will close it below. No, you must close that -100 stock. So okay. I don't think I have an example. You can check whether there's any other questions they want to ask. I don't have any examples but basically if it stocks, right? Example, if it stocks, yours you will see -100, correct? -100. Same thing. Go to that particular stock in position statement. Go to the particular stock. I'm assuming you're using Think or Swim. Okay. Right click, create closing order. Whenever you put create closing order, it means it will close that position for you. A -100 stock is pretty serious. So pretty serious. Okay, no need to be too worried, but do close it. You cannot leave it long term. You leave it long term is very unhealthy. Okay, very scary. Okay. Any other good questions they have?
I specifically ask you, in your opinion, is SPY good to do sell call?
SPY? Where got
Sell
call or buy call? Oh, buy already and sell call.
Yeah, buy already and sell call.
Actually, I won't SPY. I think generally, I don't enter SPY right now because I think it's a bit overvalued. But if it's an index fund that I think can go up, I will not sell call. Like my Nike, I learned from a mistake already. Nike. The second mistake I made is Wells Fargo's. But now Wells Fargo's drop again. But anyway, I didn't hold Wells Fargo's because when they sell call, they sold it out. Okay, Kun Hong, this one is special request for you. Are you going to share how to do repairs? Shall we do a session on that?
Next time.
If you want to learn how to do repairs means what? Like for example, your handphone spoil, how to make sure that. No, I mean repair means like the stock that you bought actually went down. How do you actually recover using options? Shall we do that? If you're interested, please type repairs. And also, please give this post a lot of shares and likes so that we know that there's enough demand for that. If it's just for one person, walao, then we do the whole 1 hour, one person watch. It's okay. I mean, it's still worth our time. We still want to do it for you guys, but it will feel a bit nicer if there's a lot more people watching now. Okay, so let's take
actually this strategy is part of repair for certain strategies. So
yes, it can be used for repairs. I think we can go a little bit deeper into repairs next time. Hey, a lot of people, what is repair? Repair usually is like your stock position. Maybe you buy the stock went down. They lose the contract, the price went down, and then it's stuck there for very long. Then you're like perpetually losing 20%, 50%. Is there any way you can use options to recover the trade? The answer actually is yes. There are ways you can use option to repair the stocks to make yourself don't lose money anymore. This is the amazing thing about options. Okay, so how many of you want to do repairs? Xiu Li. Okay. Xiu Li, okay, 我们学. Are you trying to tell him what is repair? Yes, repair is Xiu Li. So Xiu Li the bad trade, okay? Repair equal opposite. Okay. So we will talk about this. Okay, guys. By the way, if you are okay, any other questions you want to answer, Kunong? You can go through.
Yeah. Let me scroll down.
Hello. If not, we just answer one or two more and then that's it. Okay. I do hope that it's useful. Maybe lunchtime better. Hey, lunchtime more people watch. Yeah, maybe we should try doing lunch. They got more time to watch. Okay, one more thing is for those who have not joined our endless group, please join us. For those who have not liked Kun Hong's page, please go and like. And for those who are serious in like learning options, tomorrow there will be a preview. Okay, preview means that there will be sales now. For us, we want to be super upfront one. There will be a class on OMI. If you're interested, you can let us know. I'll just put a link here. If you really want, you can go and listen. For those who really want to learn a lot more, you can go there, click, and then go and learn from. Hey, how come is your name? Okay, can go and learn from Pete Tan. Pete Tan will be talking about the preview. Okay, Ken. So this is all we want to share for this lunchtime.
Yeah, I one question. I just saw.
Oh yeah.
Someone asked if I have 5 contracts, why cannot sell 2 or 3 contracts? It stated need to sell all 5. Not true. No. You can actually sell 2 or 3.
When you click close, is it? Is it when you talk about click close? Is that what you mean? I suspect that. So example, if you talk about no, cannot be one. It's very flexible one.
You can control one. It's by default they will make the equal number, but you can adjust.
Okay. Example. You can see this one. Let me zoom in. You can see your Visa. Can you see Visa? There's you want to close. There we have 2 contracts, right? You right click. Look at this. Right click, create closing order. See They will say sell 2, correct? Go ahead, go and click first. Click first. The order will come. The order will come out. That's where you can adjust here. Adjust. No, I only want to sell 1. Got it? You can adjust after you click into the order. I think that should be the question now.
Yes.
I hope that's the question now. Okay. Okay.
And important to clarify, if you have 5 contracts promising, depend on what type of contract. If you have sell call contract, I recommend you close all. But if you got buy call contract, that means you want to hold it, you can close partially. But
it really depends on the situation, because sometimes they want to get profit and things like that. So, but the thing is, it is flexible. Okay. So, Pete's tomorrow session is OMI. Yeah, he's talking about OMI. So, you have not attended OMI, you're interested to attend, ask your friend to attend. The link is up there. I can post one more time for you guys. Again, we don't want to actually spend a lot of time promoting anything here, but this one is in case you're interested. Okay. So, I think I also saw. Can I check if those very? By the way, if you got any very serious problem, this is the time to ask. I'm really sorry, I never checked my messenger because too many messages already. Can I check if there will be auto deduct from my account when it is -100 being exercised? No, if it's -100 being exercised,
if they give you money, so you see your account, suddenly got a lot of money, but you need to pay back the stocks.
Yeah, Yenny. So if you see -100, means that someone actually buys stocks from you when you don't have stocks. So they pay you the money, say, hey, thanks for giving me stocks. Then the brokerage will go and give them the stocks first. Now you have to take the money and then buy the stocks back from them. Don't be too worried. Everything is logical one. So don't be too worried. Will not suddenly money disappear. The only thing that is very risky, I feel, is when you leverage. When you got $100 or not 100 when you got $5,000 to go and buy 10,000 worth of stocks. That one your money can disappear quite fast. So do not over leverage. Okay, Ken? So okay. What do you mean? And ladies, sorry.
Create a WhatsApp group.
Create WhatsApp group for trades and options, guys and ladies. Okay. This one, sure. Please go and have a community. You all can join our endless group. In our endless group, we talk a lot about all these options trading. Kun Hong, please join. You got Telegram group or not, Kun Hong? You should start one. Hey, this guy is crazy about options. He loves options. Hey, go and start one. Next week we ask them to join our group.
Actually, I have one, but that one is very private because only very little people. But I really post everything of my trade. And people seeing me earn hundreds of $1,000s inside, so I don't want to share that one.
well, you don't want to share how much money you make. Any implication if you have minus 100 legal shares due to sell naked call?
If you return in time, still okay. But if you don't return, they will ask you to like,
Charge you interest.
yeah, they will charge you.
So Lina, if you see minus 100 shares,
After-
when you see minus, please close. There's a
Yeah,
lot
as
of
soon as possible.
sometimes you close, you still make money, but I hope that you guys lose money so that you remember to close next time. Yeah, lor. Most important is to do right trades, correct trades. Okay, then you become a good investor, and then the correct trades will continue, and then that's where the results will be consistent. Anyone in the market can accidentally make money, but can you consistently make money and still be stable in times where you still lose money, and still keep to the right trades when you lose money? That will be the one that will decide whether you're a good investor or not. Cool? Okay, can Okay, great. Yeah, there's an endless Telegram chat also. Okay, hey, you nothing to promote. I promote my endless Telegram chat.
Nothing for more yet.
Okay, hey, no. I mean, just kidding. When I say promote, I mean, nothing to be ashamed of, but it's just that since you guys, let me just share with you the endless. Oh, the Telegram chat, like example, all these, I would say, all these shows, right? We actually do have a summary version of it. You can go and read the summary notes. Okay, cool. All right. I hope that you guys have now we let Ikuno finish lunch already, right? You finish lunch already. Okay, goodbye, guys. Okay, you can join us in the Telegram group chat. I hope to see you guys next week. Bye-bye.